Hello, this is Will Allen with Centera Capital. Well, today's market update was supposed to be our 2023 report card, and we still are going to get to that, including taking a look at among 23 Wall Street strategists, only one nailed his S&P 500 target price for the end of 2023, and he happens to be the one that we are clients of, and we're going to get into what he did right. But it is very important that we talk about a blockbuster Federal Reserve meeting last week, the pivot heard around the world from Fed Chair Jerome Powell, and what that did to the financial markets. Let's get into it. Okay, so we have our 2023 report card coming up in just a few minutes, but let's start off with last Wednesday, the Federal Reserve's meeting. They meet every 6 weeks, and they have a press conference, and they had one last Wednesday. By the way, this was the third straight meeting where the Federal Reserve left their overnight interest rate that they control, the Fed funds rate, left it in the same range it's been at, which is 5.25% to 5.5%. It's a range they give. The effective rate is 5.33%. But that wasn't the big news, because that was pretty much expected. What the big news is that Fed Chair Jerome Powell, for the first time in a year and a half, basically came out and said that they were finished hiking interest rates. The rate hike cycle is over, and that now the shift is going to how many rate cuts will they be doing in 2024 and the timing of those cuts. Now, we're going to put up a headline from Bloomberg that you can see there, says Powell brings tequila to Wall Street's rate cut party. And BlackRock's Jeffrey Rosenberg says this is a green light for investors. That kind of gives you a good idea of what the market's reaction was to the message they got from Fed Chair Jerome Powell. And so stocks went up a lot last week. Bond prices went up. Cryptocurrency, gold, it was pretty much a rally for all assets. On this idea that, hey, interest rates are going to go down in 2024. Now, here's something that's interesting, is this week there have been 3 different Fed officials, Fed bank presidents, who have come out, and let's show you kind of an idea of what they've been saying. And you can see there are 3 separate headlines. Fed Bostic sees 2 rate cuts next year. Fed's Goolsbee said too early to declare victory over inflation. And then John Williams said the central bank isn't really talking about rate cuts right now. So let me tell you why they're out saying these things. The Fed clearly did not mean for the market to take Fed Chair Jerome Powell's message that, hey, all is clear. There's going to be rate cuts all throughout 2024. They're trying to kind of walk that back a little bit. At the Fed's meeting, they basically every 2 meetings give their projection. If you take all the different voters, their projections of how many rate cuts they expect through the year 2024, and that number came to 3 rate cuts. Guess what? As of right now, the market is pricing in that they're going to cut interest rates 6 times in 2024. So again, that's why the Fed Chair Jerome Powell has sent out these officials to try to bring the market back a little bit. And quite frankly, we think that 6 rate cuts probably are too many as of right now to be pricing in, but that's where the market is. Anyway, we wanted to give you our take on what has happened, because it clearly was a earth-moving day last Wednesday when Fed Chair Jerome Powell had his press conference and made this pivot from we're done hiking rates to it's time to start thinking about cutting rates in 2024. All right, let's get to our 2023 report card. And what we're going to start off with is coming into 2023, we're going to look at the year-end price targets that many of the Wall Street firms and other chief strategists had coming into this year. So we're going to put that up so that you can kind of get a taste of what that looked like. So coming into the year, now keep in mind again that this was coming off a very difficult 2022 for the stock market, and you will see that the price target for the S&P 500, you had many strategists at the 3,600, 3,900, 4,000, 4,100. Up at the top, Fund Strats, Tom Lee at 4,750. He was the sore thumb, the person that kind of stuck out and got a lot of grief for it most of the year. Guess what? As we sit here late in December, the S&P 500 is at 4,760, meaning Tom Lee has almost hit the nail on the head exactly. And I want to mention that he is one of 3 third-party researchers that we are clients of. And we take his research into consideration for our client portfolios. And he couldn't have done a better job this year. But look, there are a lot of price targets there that were very, very low. And if someone had invested based off those price targets, they would have missed a really, really good year for the markets. Now, using a price target and having a price target, that's a very hard gig because lots of things can happen over the course of the year. So we don't hold that against some of the strategists who got it wrong. But one of the mistakes that was made also by a lot of analysts coming into this year is that they projected that 2023 would be a year when the economy would go into a recession. And a lot of people believed that was going to be the case because of the fact that the Federal Reserve had hiked interest rates a lot in their rate hike cycle. We've talked about this all year long, that we did not see a recession taking place because the consumer was just in too good of shape. Their balance sheet, all the excess savings they had, and an amazing jobs market. And that's actually what happened this year. The consumer was in really good shape. They spent money, and the economy they grew at a much higher clip than what most those economists were forecasting. But the fact is that for a lot of people, there were, as we went through the year, some positive development. So we're going to put the first thing up that was a key thing. And that is, what are you paying for gas prices, okay? Because we know that across the board, prices are a lot higher today than they were a couple years ago. But we do have here late in the year some good news. So let's put up a chart of gas prices. And you will notice here that gas prices last week hit $3.07 a gallon. Across the country, national average, and you can see that you have to go back. We briefly hit that level in January of this year, but you have to go back to mid-2021, the last time gas prices were this high. This low. Now, another point I want to make, that gas prices we know were a lot lower 3 or 4 years ago. They were down at $2 and in some cases under $2 a gallon. But it is good news that as we sit here today, gas prices are basically at their low for the year. Now, let's talk about something else that a lot of people care about, and that is mortgage interest rates have come down lately, and that is good news for you if you need a mortgage. So let's put up a chart of where the 30-year fixed mortgage is right now, and you will see that currently the interest rate for a 30-year mortgage is at 6.64%, which the good news here is that just 2 or 3 months ago, this rate was over 8%, and that completely froze the housing market, especially for existing homes. There were still new homes being sold because the builders were buying down interest rates and they had cut prices on their houses. But if you wanted to sell your home, you weren't going to do that if you gave up a 3.5% mortgage, because mortgage rates were at 8%. Well, now they're at 6.64%, which is still a lot higher than they were. But now consumers or homeowners are saying, hey, this is a lot better than 8. So maybe I should think about putting my house up on the market. And we've seen in the last couple weeks an increase in mortgage applications and an increase in houses for sale. So this is another good piece of news as it relates to what has taken place over the year of 2023. Now, one more thing that we want to talk about, and I think is important as we end the year, is going back to this concept of how is the economy doing. In the third quarter, the economy grew at 5.2%, which again was phenomenal. Again, most forecasters had projected a negative growth rate for the economy. Well, we have some good news for the fourth quarter, which is just about to end up. The Atlanta Fed has a tool called GDP Now, which we've referenced multiple times. And basically what it is they take all the economic data that's been released and they give their projection for what will the growth rate for the fourth quarter GDP be when it comes out in January. I'm going to put up that chart because you will notice that they just updated to a new high of 2.6%. 2.6% for the fourth quarter. This was at 1.25% just about 2 or 3 weeks ago, but the data has come in better than expected recently, and so this is up at 2.6. So again, the economy is still doing really well as we close out 2023, and we hope that that momentum carries over into 2024. Now, that's going to do it for our kind of look back at 2023, and like I said, I wanted you to hear our opinion on what the Federal Reserve did last year. I want to tell you that next week we have our 2024 outlook when we're going to pretty much be looking forward. And that's going to be really critical for your portfolios. So we want you to make sure and be on the lookout for that. If you are new to us and you have not seen some of our videos before, we have our website, centerracapital.com, where you can read up all about who we are. You can see past videos. If you're watching this on YouTube, you can like and subscribe, and that way you will not miss any of our content going forward. Again, thanks a lot for watching. Merry Christmas, Happy Holidays. We have one more video coming to you next week. Stay tuned. Thanks so much for watching our video. Don't forget to like and subscribe, share with your friends or family member. Here's the bottom line. If you are not happy with how your portfolio has been performing, or if you aren't getting this kind of communication from your advisor, go to centerracapital.com. You can give us a call. You can talk to an actual person. How awesome is that? All our links and information is down below. Let's get the ball moving forward. See you there.